It's been a fairly eventful 24 hours or so in terms of event risk by which market participants have had to navigate through. The wash-up though is that Asian equity markets should open either flat or a slight negative bias. 1 UK, we can really look at the various themes into three main categories, these being political, economic and central bank meetings. Firstly, on the political front, there has been some focus on proceedings in the UK where Theresa May lost the backing of 12 MPs who voted against her government for an amendment to the EU withdrawal bill. This effectively means Parliament have to vote on, or what is labelled as a meaningful vote, on any Brexit deal. GBP/USD traded down to $1.33.85, but has recovered nicely. It's been a lively night of political issues in the US, with talk, in Politico, House Speaker Paul Ryan will step down in late 2018, although he later refuted these claims. After this week's Alabama elections, there is building anticipation around the November 2018 U.S. midterm elections now, where Paul Ryan has a strong role to play. That said, the bigger focus and impact on markets has been on news Republican Senator Marco Rubio is opposing the Republican tax plan unless the refundable portion of child tax credits increases. To US dollar, there has been a decent downside reaction in the Russell 2000, with the index currently lower by 1.2%, and we have seen selling in the USD, with USD/JPY trading into 112 yen, although the USD move on the day has been more pronounced against the CAD and AUD. USD/CAD has also been given a nudge lower by a more hawkish than anticipated narrative in the Bank of Canada meeting, with Governor Stephen Poloz talking very constructively about the Canadian economy. AUD/USD has moved higher by 0.5% on the session, but recall most of that move took place in the wake of such good employment numbers yesterday. Still, the Rubio news has given this extra tailwind and the pair has pushed into 76.80. 3 US data, perhaps the USD would be lower if it were yet for a strong US November retail sales report, with headline and the control group element both growing 0.8%. The control group is the basket of goods that feeds directly into the Q4 GDP calculation, and we can see this retail sales print has already seen the Atlanta Fed upgrade its real-time GDP forecast 49 basis points to 3.31%. Good selling has also been seen in the 2- and 5-year part of the US Treasury curve, although there has been little move in the longer end, and we can see this also priced in the interest rate markets, with the Fed funds future now pricing a 68% chance of a March hike. This implied probability stood at 56% yesterday. This is supporting the USD to an extent. For Fed talk, Marco Rubio's demands have modestly lowered the prospect of tax reform actually materializing, but recall the Fed only see a short-term impact from fiscal stimulus anyhow, with its GDP forecasts for 2018 being pushed up to 2.5%, but then expected to drop back to 2.1% in 2019. This in itself is interesting given they left its expectations for interest rate hikes at 3 hikes for 2018, so the Fed are prepared to tolerate higher growth and strong employment in a bid to gain inflation. 5.